Okay, we are near the top of the hour now. And so let's kick this off. There's a lot of content to cover. So, welcome everyone to TractorZoom's Summer Equipment Market Update webinar. Got a lot of details to go over, and I'm going to go in depth on some of them. We've had a lot of movement recently in the equipment market. There's been a lot more than usual dealer auctions that have happened in the month of June. And so I've been able to dive into all those, dice it up, probably too much to actually cover in this one webinar. And so if I go and cover a category lightly, and that's a particular interest to you, I'm thinking row crop headers is going to be one that I'll hit on lightly, but I've done a ton of research on. Feel free to shoot me an email. I'll provide my email at the end, and you might even have it via me shooting you a newsletter. But feel free to reach out and let me know because I'd be more than happy to go into an in-depth discussion or share more information. But for the sake of time, let's get started. And this is one of the particular auctions that I was talking about. We saw a lot of movement in the auction industry for good reasons that I'll explain later. But this is AgriVision auction, an inventory reduction auction that they held at one location. So it was a little more old school, also simulcast, so it was online, but it was a bigger event. And, anecdotally, I can say it probably, and this picture was taken as those gators and attachments are selling this utility tractor here in the foreground. Those brought good value, and I was impressed with how it turned out. And I think the auctioneers and the dealership were as well. So that on-site auction, a little bit of the buzz that created was an event, and I think it might have helped rise those average auction values a little bit. But I'll be dissecting a little bit of this auction along with other recent sales that we've seen. So for today, I'm going to, at a very high level, just set the stage about what's going on in the ag economy. I'm sure everybody out there is very familiar with exactly what's going on. But one of the key pieces is recency in this one, just because it's moving and it's moving relatively quickly. So I'll hit that at a high level. From a category standpoint, we'll go into headers, platform headers a little more in depth. And then, like I said, row crop headers, combines, class 7, 8, and 9. Utility tractors I'll hit on really lightly, but we've done an external piece that Autumn will share with you once we get to that point. Row crop tractors, four-wheel drive tractors, just very lightly. I've started to dive into those, and I probably need to do more work there yet. Sprayers, and then we have an additional piece with sprayers that we'll also share out. And then I just touch a little bit on planters because it's a unique nuance for good reason again. And then right at the end, we'll just talk about what we might expect for the rest of this year. I was just on an investment call earlier today that talked about the energy markets, which has got some implications for corn and therefore the equipment market. Since so many of you are new on this webinar for the first time, I thought I'd give a real quick introduction. So my name's Andy Campbell, Director of Insights here at TractorZoom. I've been here for about 4 years, and my background is everything from engineering, academia, consulting. I love the numbers, but I also grew up on a farm and helped to continue to operate that farm. Just sold a lot of grain yesterday, so I kind of took it in the shorts there, so I can kind of relate to some of the ebbs and the flows of this industry. And that's essentially my job, is to listen to what's going on in the industry, bring it into TractorZoom, and then take what TractorZoom has and also share that out with our partners in forums that are just like this. We have other forms of marketing and communication and value that we share out that I will hit on a little bit later. But with one being, that you see up there, we've started a podcast this past year, primarily dealer focused, but I'll go into that in a little more detail later. And then who is TractorZoom? What is TractorZoom? We've grown a ton over the past 4 years. A lot of people still might know us as just equipment valuations, auction comparables, and that is just a sliver of what we do, although that database has grown tremendously. And so it just allows us to have a quick pulse in the market, but not just in terms of values, but also supply. So that's a lot of what I'm going to cover today. The auction values, we've got about 80% of the market covered, especially the high value row crop market that we're going to primarily focus on today. But we also have customers that are more in the fringes and specialty markets from a valuation standpoint and an inventory management standpoint. So we have TractorZoom that faces the farmers. It's a one-stop shop where they can find equipment. The TractorZoom Pro, where we help lenders, investors, dealers value equipment, manage the inventory, the supply, and then gauge market trends. So you'll see some screenshots out of that. And then we also have Anvil Pro, which is a business system solution that integrates everything within a dealership. And the Anvil Pro is the dealership side. but it essentially allows them to have precision business systems and advance their dealership growth that way. So anyways, a little bit of an overview that we do here at TrackZoom, which is a lot. It's changed a lot over the years, which is good. And then this is a quote that I really wanted to focus on. This came from a recent conversation that we had with a dealer, and he was just lamenting over the point that, we all know it's changing. Obviously, the ag market is not at its zenith anymore, but it's the rate of change is probably the most concerning, the thing that we really need to focus on. So he's saying if you're looking at auction data, which tends to be a leading indicator of which way the market is moving, it certainly is, but it's the recency of that that's really showcasing right now. And in this webinar, I've highlighted the last 30 days of sales. So you can see not only what the year-over-year trend is, which is going to be important if you're adjusting values within your lending institution, just to make sure that you're not underwater in your collateral. But also, if you look at that rate of change, then you might be able to predict, okay, this is where it's going into the future, because it's definitely not a linear change, at least not right now. So yes, recency and transparency are key. And then speaking of recency, this was the recent survey that Purdue, they do an ag barometer survey of 400 farmers across the United States. A lot of you are familiar with this, but I wanted to highlight the Farm Capital Investment Index that they came out with here in the month of June. And it's showing a steady decline. It's not a precipitous drop, though, and I thought this was a good thing to highlight because I'm going to show you some soybean and corn charts later that are a little more of a precipitous drop, but it does show a weakening in farmers' interest to invest capital. We're seeing that in land values, and I'll talk about that in a moment, and we're certainly seeing that with equipment as well. So slowing, but it's not stopping, and so that's the one thing I wanted to highlight with this. It's obviously reflecting what's going on in the commodities market and higher interest rates. It's the second lowest farm capital investment index point that they've had ever since they've been recording it. So in that sense, concerning if you want to move equipment, concerning if you have a high value on equipment, but it's not, the bottom's not falling out. So there is hope, and I'll get onto that and hopefully end this whole webinar on a little bit of a positive note. But what is actually making it drop? Again, they do a nice job with their survey. And I was talking with one of the professors that's in charge of this last month. And if you take a look at all these colors, it can be a bit of a mess here, but look towards the right at the rising interest rates. You'll see kind of it troughs there around 18, and that is February's timeframe. And this is people's amount of concern, and that section right here is the rising interest rates. And even though interest rates have not been rising, it is carrying a greater and greater proportion of their concern, which if they don't have the revenues to be able to offset the rising interest rates, it's going to carry a bigger portion of their worry in their mind. And so keep that in mind, because I know half of you out there are lending the money to them. Half of you out there might be dealers and having to battle that interest rate cost. So it's just taking up a bigger and bigger portion of their concern. Okay, so throughout this webinar today, we're going to talk about a few different components, lease residuals being one of them, and Autumn's here to help me to release a poll. And one of the things I wanted to hit on with this one early is we promoted this webinar because we're going to do market trends and lease residuals. And so we've got a poll up here. It's got 3 questions on it. You can go ahead and answer those now as I talk through this. And I'll say that we've had multiple guests kind of lined up to answer questions that we've grabbed ahead of time on lease residuals, and all of them fell through. It's obviously not an easy topic, or apparently not an easy topic to answer. And so what we're going to do with this is, obviously a lot of you are interested in this topic. We'll collect questions here. We've got questions already. We'll go out to our contacts and start to answer those, and then deliver it to you in a different way, whether it's a video, whether it's a white paper, or some analysis that we'll have to essentially make good on the fact that I don't have anybody sitting next to me here to answer the lease residuals questions. But first of all, I want to see how important are determining lease residual values to you. This is the first question. If you scroll down just a little bit, if you haven't answered it yet, There's a lot of different data points regarding equipment that go into calculating lease residuals. I'm curious to know from your standpoint, which one of those, and I picked four there. How important are each one of those four? So current value of new equipment, is it less important, somewhat important, or very important? And then you can do that same scale with current value of used, projected future value of that used equipment, or the rated depreciation of specific make models. And these are all different pieces that I'll also be able to cover in the webinar today. But I'm curious to know how important each one of those are to you. And then the last one is open-ended. This will help us answer questions that are out in the industry and then get back to you to make sure that we're asking the right kind of questions to be able to answer them and then return that value to you. So leave this up here for just another second. We've got 2 more polls throughout this webinar, so you get a little bit of a break from me droning on, and I get a little bit of a water break. Okay, Adam, those should be good. And so now that the answers will pop up for these quantitative ones, this might be important. So how important are lease residuals? Probably sit in the average there that it's helpful versus and important, being the 2 top vote getters. Good. Okay, there we go. Of the following equipment data points, the current value of new equipment, less important there. Oh, yeah, a little less important. When you look at the very important, which is your orange graph, it's the current value of used, which we'll cover a lot of today. Also, the TractorZoom Pro users should be able to triangulate that pretty quickly. The future value of the used equipment, which I always reference as like point B. We know what point A is for on TractorZoom Pro. It's projecting that in future value, point C. And really, D is essentially figuring out that slope between those 2 lines. There's a little more nuance to it but this is good. This is great feedback. Okay, so we'll go on. And like I said, I will make good on finding some answers and getting it back out to you guys. So when we're talking about what the market is actually doing right now, this is a soybean chart. I believe November beans as of this morning. And so it's in a bit of a decline. Corn's worse. So wanted just to set the stage. Again, if you're not up on this, that there's certainly reason for the farmer to be worried, but I'd say they're not freaking out right now. They're just being judicious with their spending and doing it where necessary. But we can say from that AgriVision auction that the results beat a lot of people's projections on what they thought they would bring. Okay, so let's get into categories of equipment, and I'm going to try to highlight each one because there's a lot of data in them on what the overarching theme is for these. So looking at headers to begin with, and again, if you're in the dealership world, this should be close to top of mind considering the season that we're coming up on. But we're starting with platform headers. I'm going to go a little more in depth there, and then row crop headers I'll go a little quicker on. But takeaway here, the age and manufacturing year just makes such a large difference in this. Obviously, the late model stuff, and you'll see this in every trend that we cover here, is the late model. So the stuff that was produced in the last 2, maybe even 3 years, has a higher value, so it has higher to fall. I call it essentially the Icarus principle, that especially if it rose up a lot in the last couple of years, which things did in 21 and 22, it probably will fall back down. And so there's certain brands and certain models that really did that a lot. And I'm seeing those ones retract in value probably the most. And specific to headers, row crop headers, maybe the most. The manufacturing year makes such a big difference, just because, especially with chopping heads, and some a bit on the platform drapers on those headers, they made engineering changes on those, and that makes quite a big difference. So you want to get down to the specific make, model, and year if you can when you're doing comparable values. So at the AgriVision auction, say we did a prediction ahead of time and took the most valuable lots that they had. They sold 168. I was able to make it through about 98 of those beforehand to do predictions on. Obviously, I started with the combines, the larger tractors. Once I got to row crop headers and platform headers, I did an analysis on those that I'm going to show you. And I found that it was the 70/40 flex drapers that I was significantly off on, by far my biggest miss. And then I was going back through and dissecting, like, why did I screw up so badly on those when I was so close on everything else? And they were the only ones out of rush that I gut checked, that I just went off the gut. Like, I think that they're going to hit this, and I moved on to the next one because I didn't want to spend the time and I wanted to get more analysis done elsewhere, and ended up being off fairly significantly. And I think that reflects a little bit of the fact that I'm not very smart at this, but I've got Tractor Zoom Pro behind me, and also that the market is moving pretty quickly on this. So even if you do trust your gut and you've got good experience in this industry, which there's a lot of value in that, the market does move, and it's moving pretty quickly now. So gut check yourself on checking some of these values. Okay, so I'm going to start each category with this, where we get to take a look at supply and demand and essentially the turns in the market. The reason why I look at this is, in my experience, this is a snapshot out of Tractor Zoom Pro's market trends. You've got your supply on the dealership lots across the top in the blue, and then your trending sold, which we denote as, okay, what's moved off of a dealership lot. That's on the bottom in the red. I take the red divided by the blue, multiply it by 12 to try to get an annualized turn rate. Now, I'm only looking at the month of June, and so I'm not taking a wider swath. So I just want to see in June how things trending here in 24, which is just 205, versus how were things trending in 2023, just to figure out the speed of this market right now. Anyways, the point I was making on the turns is, I see this as a leading indicator a lot of times on the direction that the market is going to take. And sometimes it might even precede it by 3 months or 6 months, but it's a really good indicator, especially if you can hit a peak sales season of when things should sell. And how did that peak season do last year, or even the 2 years prior, which you can do all that, simple math on Tractor Zoom Pro. So anyways, looking here at the platform headers though, just a slight decrease in the overall turn rate, which means they're selling a little slower. And we're going to go in depth on just some platform headers here. The more of a late model RD40, so platform flex head from Deere. You can see the black. I've color coded almost all this, and hopefully it's consistent throughout. But in 2024, these black dots are below the 23 values and well below the 2022 values. You'll see this trend throughout. And the last 30 days, I have those highlighted in the most of these in magenta, just so they should pop, and you can start to see, is this market really starting to move a lot faster right now, as opposed to maybe what it did in the first quarter pre-planting season. And so with these flex drapers, they certainly are. And again, sticking with some more late model, just a little bit more on the age, that 24 piece that you see on the 4-year-old John Deere 745 flex draper, that might be a little bit of a nuance, but it's still showcasing that over the last 30 days that this is dropping. And then as we get into larger pieces of equipment, I might just straight line depreciate this. And for the most of the rest of these, that's how it's going to go. But I wanted to highlight this one just to say something that I'm seeing across all categories of equipment, that once I get above about 10 years, I don't know, I see values really start to blend together. Paint fades, and so do a lot of other flaws. And so I'm not seeing a big price difference once I get older than 10 years on that piece of equipment. So for a lot of the lenders that are out there, if you're looking to recalculate what's going to make the most difference, the stuff that's older than 10 years, I'm not seeing large year-over-year value fluctuations on those, with the exception of your kind of pre-def row crop tractors. Those are a hot spot, and I'll address those later. But you can start to see that, but less than 10 years, the recent auction values are dropping. And on these, we're still seeing this black line is about 10% lower than what we saw in 2023. So if you're looking to adjust your valuations on the platform headers, 10% is a decent adjustment. Once you get over 10 years, that's these data points right here, we're seeing the recent sales match or above. There's few data points out there for things like this, but that's where things really start to blend together for the last couple of years. And then also, this is an older one, 10 plus years. Just look at how messy that is, but it's all sitting within the mix. And so you probably have more quality issues that are defining your differences in price there. And so platform headers as a summary, and I want to hit on this a little bit because this is going to be the majority of the rest of the webinar, that I've got different models off to the left, annual change that I'm calculating for all those models in that center column there. Again, for those flex drapers too in the middle, you're sitting at about a 10 to 15% drop. Off to the right-hand side, if it's got a red block, that means the last 30 days has been below 2024 trend line. So it means it's dropping. If it's yellow, it's sitting right at the 2024 trend line. If it's green, it's actually above the 24 trend line. Now, a couple things just to take away from this at a glance at a high level. We didn't see older case models increase in value as much in 21 and 22. So again, with that Icarus principle, they didn't go as high. They're not going to fall as far. Now, some of the John Deere models did. And so what we're seeing, especially those RD40Fs, they haven't changed a lot year over year, but now they're starting to get a lot softer. So those last 30 days, every single sale has been below current trend line. So even though it's down 3% year over year, it is the momentum's pulling it even lower. So I'd expect that one to drop. Okay, row crop headers. Now, we saw the row crop headers drop here about, looks to be about 10 to 15% on the turn rate. And I've gone into depth on some of these. I just want to show that on row crop headers, chopping makes a huge difference, and so does the manufacturing year, just again, due to some engineering changes, clutches and stuff. So if you're doing valuations on these, pay close attention to what you have on these row crop headers. But seeing a decrease on these chopping headers, and on the case, what we're seeing here, similar to what we saw on the platform headers, they didn't rise as much. And compared with 2023, these are not falling nearly as much, almost exactly mirroring what we saw for values last year. And on the headers specifically, the number one determinant that we found for valuation, if you're just doing a graph like this, you've got your value on the side and you have your years, the number of harvests that they've been through. There's other pieces that fit into that valuation as well, but that's the one of the largest determinant of values once you get it down to the specific make model. And again, so looking at row crop headers, we're seeing these be a little bit weaker, especially for your really late model type stuff. So stuff that's very recent. One of the big differences here, and this is going to happen across other equipment categories, is they're a lot more expensive now than what they used to be. So, you know, your late model chopping, folding headers, so the C12F, you could be close to six figures on a lot of those new, and some of the used are also hitting up against that. That is now a pretty significant investment for a lot of farmers considering the economic environment. And so it makes sense that we're seeing that strong of a downward pressure on those in terms of an annual change. Okay, wanted to breathe for just a second. And we've got another polling question that we want to ask you before we really get into the meat of the combines, row crop tractors, and else. But the question we're going to pose next has to do with marketing content and how you guys like the information that we can provide. One of the pieces that we've done recently, based on feedback from dealers, as we've launched a podcast, Beyond the Hood. I'm sitting in our actual studio room here, and I wanted to see, okay, is this applicable to this audience, or what other pieces are out there? So you can go, if you are a podcast type of person, go Beyond the Hood. But we want to ask, how do you prefer first to consume industry related information? Obviously, webinars are probably one of them, considering that you're here, but we just also don't want to assume that this is the only way to get the information out there. So if you wouldn't mind answering that first question, how do you prefer? And you can click any that apply. And then the point number two is, what other types of information are you actually interested in? So market trends likely is one. We've talked about lease residuals. You can put those down if you want. But is there other types of information? It could be even non-tractor zoom related, but feel free to put that down. We just want to make sure that we're always gauging your feedback on what's applicable to you. So while you're finishing this, another reason why I had this one up, and I took the exact screenshot of my conversation with Jim Rothermich. He's the land talker. He has been in land real estate for, I think almost 20 some years now, and specifically has been gathering data on land values in Iowa just as a litmus test to how the industry is doing. And this gets to the point of having transparency and being able to see into the data and why it matters. If you look at a lot of land valuation reports that are coming out right now, they're talking about there might be a potential for land to be softer. But what that doesn't say is what data points they're reporting on. So they're going off of land sales now versus before. But what Jim says in this podcast, and you can listen to it, he talks about at the time of our recording, there were 17 no sales that he had recorded in the state of Iowa in the first half of 2024. In 23 and 22, there were zero no sales, which means essentially that it didn't hit a reserve price, that the sellers weren't satisfied with what the value was bringing. And as soon as 2 days after my conversation with Jim, we had a land sale up by our farm. It also went for no sale. It wasn't going to bring what we had seen lately within 15% of market value. And so that's one thing that he talks about in this podcast that you can glean. And another indication that land sales, land values might be dropping a little bit more than what's actually being reported. Okay. So one other thing, and Autumn can throw this in a link in the chat, I believe, but I know a lot of people want the video content or they want analysis content, but they might not want a whole hour of me talking, but they might be able to take 60 seconds of me or some other type of option. So if you go to the bottom and you click that chat right now, you won't lose me on the webinar. If not, you can hop right back in. But you can go there and subscribe to Tractor Zoom Pro's YouTube channel. We're putting out a lot more video content. It's just easier to do and it's more timely, like I was saying at the beginning of this podcast. And so it's just an opportunity for it just to be fed to you, or you can go consume it when you want, but it helps if you subscribe so you can at least be alerted when an equipment update is worthy talking about. So, and we do a lot of 60-second ones because they make me be brief. Okay. So this is my reminder to ask Autumn to put out the poll. And let's get into combines. So higher value thing, if you're looking at a lending institution, these are probably also your higher risk piece, probably closely followed by tractors just because it's a bulk of the equipment that's out there, and then maybe followed there by sprayers. But we've also seen these be fairly tumultuous. And so with combines, we're going to start with class 7s, 8s, and 9s. And with this one especially, I really see turns. So the overall supply versus what's sold as a good leading indicator of what's going on in this market, especially more so than row crop tractors. So this is a combine that sold down at the Rice Agrivision auction. And the first S780 that sold, and I was expecting these guys to be a lot softer, it sold well above market value. And then the top was taken out. And once that buyer was gone, then the second two sold closer to market value or a little bit below. And then the fourth one sold well below market value. And I think that just kind of epitomizes that there's not a lot of premium buyers right now in the market that are willing to spend that. The overall turn rate on class 7 combine, so that was a class 8. Class 7 is flat year over year. And I went through the analysis on 3 different types of combines: John Deere S760, Claas, and the Deere's S770, all flat. All those trend lines in 24 exactly mapped 23. And we're still, I mean, some are a little bit below market value, but a lot of them were just right on the line of what we've seen in the last 30 days. And so I think this is good proof that, yes, those turns metrics, the supply demand really carries over. And again, the class 7s aren't the bulk of what the value that's in the industry right now. That is the class 8s. So when I look at class 8s, if I did this calculation correct, that's about 11% drop in the overall turn rate from last June to this June. June's not a massive combine selling season, but it's getting to be a little bit more so. Dealerships are incentivized to get things out of the lots, and so we saw intensity in selling pick up a little bit in June, but 11% lower than it was last year. And I've handpicked a few class 8s to talk about. So 8250, one of Case's more popular models, we're seeing these drop about 11% year over year. The black dots being the 2024 values. And then your magenta there are the last 30 days of sales. So 2 right on, 2 below. And for these, obviously with a slightly diverging depreciation curve or a line, as you put it there, I'm looking right at about the bulk of the middle, the median point. So I picked up 750 SEP hours on that one. You look at the Deere S780, probably the most popular brand in terms of volume that's out there. And again, we're seeing about a 6% drop, so similar to the case model with your magenta points last 30 days. Again, a couple hitting at or above, most below the trend line. So that market continues to soften. One of the things to note here with Class 8 combines is they took a little bit of a hit towards the latter half of last year. And so this downtrend is a little bit on top of an already, downtrend that we saw towards the end of last year. And I also did one in the New Holland just to give you a wide variety. There's more variability with the New Holland, just with less auction sales that are out there. And so if I had to peg this one, I'm really looking at about roughly about a 10% drop in Class 8 combine values with, the market down, but I think we're going to see other categories that are a little more concerning and have further to drop. And then finally, the Class 9s, 10s, your larger combines that are out there, you're seeing the supply really start to grow. This is the growth of that overall supply is probably more of a factor of just the newness to the market. And then more of these are entering into the market and more taking share on dealership lots. But this overall Class 9s, I got to turn my notes so I don't have to do math on the fly. But we're seeing that turn rate actually increase 10%. Again, I don't think that these are necessarily going in a totally different direction than the Class 8s are. It's just that the newness of them out there, they're able to sell more and their supply chain tightness a little bit last year too. So the turns are actually increasing on this one. The values are not. The values overall are down about 3 to 6% on the Class 9s that I was able to dissect. But, and this is a big but, and this is a differentiation when you're looking at those Class 8s to Class 9s, that with that increase in that turn rate isn't putting as much pressure as the Class 8s have seen. And then here you're also seeing that the market is responding by not being as weak, where I think you've got what on these S790s, a few points at or above the current 2024 market trend. So there's not as much downward pressure on these guys. Not as many data points on the 9250, but again, you are right there. 24 values are the same as 23. So that again, just showcases that you got to look at these turns metrics, supply and demand, helps indicate the price. So to summarize a couple of these on the Class 9 side, yeah, the values are down just slightly, but it's not significant. And I would say that the overall, I increased this the last 40 days because you don't see as many of these, and I wanted to grab all of June data, that it's weaker, but it's steady on the trend of these guys. Okay, utility tractors here. And let me check something. Oh, okay. Good. I've got a question from one of our guests that I want to address. I'm going to hit it right after this utility one, but I'm glad it was asked. So I'm going to hit on that one in a moment. Okay, utility tractors. Now, with utility tractors, it could go way in depth on these. The AgriVision auction was a great showcase of, hey, if you get a lot of people, get them excited on a local event, I think it can boost the auction values if you have to auction for inventory reduction. For utility tractors, we saw those bring really good value down at that auction. Now, the overall utility tractor turns metric is dropping. So you've got the utility tractor turns dropping about 15% year over year. We did a separate analysis to this. So again, you can watch the chat. We'll send this out in the email that'll follow with the recording that we'll send out early next week. But Amber will throw this one into the chat as well, that we just did a one-page analysis on the utility tractor. And I also recorded another shorter video on how I go into Tractor Zoom Pro and I dissect a single category. And so I know a lot of people are asking questions on how to utilize all the tools within Tractor Zoom Pro. What you're getting from Autumn right now, this utility tractor analysis, is a step-by-step instruction on at least how I go about doing it. So something you can take and maybe share within your organization. But at a high level, 61 55Ms are, I think there were 3 or 4 of those that sold at AgriVision right on trend line. Now that trend line is down about 13% year over year, which again, we'd expect with this category. But one of the things with utility tractors, compacts, even subcompacts, that those attachments just make such a big difference on the valuations. It can be a pain, I know, if you're trying to do comps and even a desk eval on these to actually get it right. So we've worked with a lot of people that specialize in the compact subcompacts. They gave us a lot of good advice, and we leveraged and built an AI tool that helps us. We call it smart descriptions, but it helps us identify all these attachments and all these nuances. And that's available within Tractor Zoom Pro right now. So that actually helped me build this graph and got things between 2,000 to 7,000 hours, cab, no loader, and also from a geography standpoint. I didn't want anything with the Gulf state, so I could have a very direct comparables to each other. So anyways, that's all in that attachment that Autumn just sent you. Okay. Row crop tractors. There is a ton of value within row crop tractors. And if you talk to anybody that understands the industry well, they'll talk often of row crop tractors being kind of the cornerstone of the industry. They don't have as much seasonality as any other piece does. They're probably the most important piece of machinery that you've got on a farm. And so because of all those things, they tend not to be as volatile. And that still holds true, but that doesn't mean that they're immune to a market drop. And there's other nuances. I took this picture because you've got an R series there. To the left, you have an 8130, so a pre-def, probably one of the older tractors that was sold at this auction. And that second tractor in on the right brought the most attention, but by far. And from a prediction standpoint, I said I was off on the row crop headers when I used my gut check. I was only off by more on that guy right there because I really underestimated the hype that he would bring to auction. Now, I know these things are not as frequent, usually not as overall high value, but it is good to know at least what this trend on those pre-def machines is doing. And this 8130 was a great example because we used to have one at the farm. We, luckily sold it about a year ago. And I did this analysis when we were going to sell it. I believe our tractor was just at 5,000 hours. So it was one of those right about there, sold really well. And it's actually that one, apparently an equipment jockey bought it and he's trying to resell it. With what he had to buy for and what he's probably going to have to pay in some kind of commission and selling it, probably going to come out maybe breaking even. And the reason why I point this out is it's sold for a premium. So in 2024, they're beating 21 and 22 values. That doesn't happen with other pieces of equipment in this down market. And so those pre-def machines are going for a premium. It did at the AgriVision auction, but I think it's probably hit its zenith there to where those values are still high. If you build a lot of hype, you're going to get buyers, but that's going to erode eventually too. Higher interest rates will slowly correct even hype like this. And so they're up there for a good reason. They serve a great purpose and they're good tractors for the farm. But the high value on those things right now is probably topped out and it might come down slower to reality. So, okay, now getting into more recent models. So the smaller row crop tractor market, turns have slowed down on these just a little bit. So we're looking at about a 16% drop on these turns on this. So that sounds significant when we compare it with the reduction in turns that we might have seen on those Class 8s, certainly compared to the Class 9s. But when we look here, I've got Magnum 280 and I've got the 8R 280. We don't see the price reduction as much. And so even though the turns are slowing down more, it shows the resiliency of the row crop market. And again, the magenta points are below the trend line on the Magnum 280 and about a mix on this 8R 280, but your 2024 trend line is below, both to the tune of about 7 to 5% on that. And so again, the market's down, showing some resiliency though in the fact that it's not down that much. Oh, and I forgot to mention, but now is a great time to mention the events that Tractor Zoom is going to be at, because if I put this off any longer, I'm going to forget. If there So we're going to be at Risk 360. So for all the farm credits out there, we'll have a crew at Risk 360 and the Ag Lending Forum that is later, I believe, at the end of September. So end of August, Risk 360. End of September, we're going to be at the Ag Lending Forum. We're going to have a good crew there. Come up and talk to us if you're there. Love to help you out or just touch base. On the dealership side, it's only like 2 weeks away. We've got the great opportunity to go up to the Dealership Mind Summit, and we're working with Mac on sponsoring their leadership workshop prior to the Dealership Mind Summit. So if you haven't signed up for that, you've got some leaders going up to Madison, the Dealership Mind Summit at the beginning of August. Definitely sign up for that pre-workshop. We'll be working through there and to get you some actionable takeaways from a leadership transition technology standpoint. So I'm glad that person asked the question of where we're going to be at, because we'll be in Madison. Love to see you there. Okay. On these larger row crop tractors, then, so 300 to 425 horsepower, I went back and said, okay, in the first quarter of this year, how did those things turn? And 23 versus 24. So early in 23, market was still pretty good. On that period right there, this is unit turns. Everything I'm showing you here is unit turns and not financial turns. About 2.5 turns a year annualized. Now this most recent Q1, 1.85. So I think that's about a reduction of about 25% on that turns. And even if we look at June, it's a little slower. It's not quite as slow. So we're probably looking there at about a 6% drop year over year. But still, a lot of damage has been done, and that's slowing to the turns. That's incentivizing people to get rid of them. From a John Deere standpoint, those 8R series, they're high inventory right now, and working to reduce those. Also, we got a lot more players in the market now. Fendt is you're seeing a little bit more of that here in the Midwest, at least. And so with this analysis, I was able to look at Case, Fendt, and Deere models and see how they stack up and how they're changing year over year. But with these still softening, not everything is below trend line, but Magnum 340. Now, one of the things that you will see is I've got hours across the bottom, value on the side, and they are squared about just how well do the hours predict price is really good for real data like this, auction data that's not built in a lab. And so it just gives good verification that you got to get those hours right, and then look within that specific make model and have that transparency of data. Now the 8R, I scrunched this up, so I really looked at a tangent to that line. And so you see 2 linear lines here. But again, we're seeing a more recent softening with all those magenta last 30 days of sales, all below the current trend line. Got a great question from the audience. I'm going to state it now. I'll see if I can answer it off the top of my head, but if I can't, this will be a great piece of homework. Thanks, Alan, for giving me homework, but a great piece of homework for me to follow up on and get that out to you guys when I send out the video recording. But Alan's question is, what are the turn and price differences between 4-wheel drive wheeled machines versus track machines? Also, what do you see with the bareback versus the PTO? Both very interesting questions. The bareback versus the PTO. I mean, the scraper specials that might be out there, you start to pull into the construction industry a little bit, something that's more stable now than potentially the farming industry is. So I think there might be some differences there. I don't know, but that would be my guess, and one of the reasons why I'd look. And then the price and turns difference between 4-wheel drive machines versus tracks. I'm going to write it down so I can answer that one hopefully later. And right within Tractor Zoom Pro, I know you've got filters, so I can go in there and specifically toggle on 4-wheel drive, just tracks versus wheeled. And then I can go calculate the turns. I can calculate the price differences there. So Alan, I don't have the answer for you right now on that one, but I do believe I can get it for you. Okay, and then the 8R410. And again, like I said before, I did an analysis on probably 2 to 3 times as many of these models, just so I could start to aggregate things and get a good feel for what the market is doing. But there's certain models that I selectively want to talk to you about, and this 8R410 is one of those. So a change that's happening in the market now, and this is highlighted here. Look at how many low-hour 8R410s have just hit the market in the last 30 days. So almost half above, half below, when you're looking at those very late models, probably about an average of 250 hours on those. But the fact that they're coming out that low, those are high value items, more than likely dealership auctions on those. Second buyers are very difficult to find right now. It has a lot of things to do, interest rates, the higher values, the lower farm economy, but also just the nature of the beast last year when there was more profitability, people had the option to buy. They had the option to buy ahead. And so people that might have been a second time buyer were able to leapfrog up and spend a little bit more and maybe become a first time buyer. And now they're out of the buying cycle for a little bit of a while. How much that's affecting this, I don't entirely know, but it's likely contributing to this, where we're going to see a higher supply of these low hour machines that are sitting down there. And this last 30 days in this one is a little bit of indication of that. But yeah, if you're looking at the overall large row crop tractor market, this is probably the most telling of all. Again, they're row crop tractors. They're a little more stable in the market, but everything you're looking at here, 5 to 9% decrease year over year. That's to be expected considering what we're going through. It's the last 30 days. It's probably the most concerning piece to me, that almost every single data point that we've collected is below 2024 trend line. So that part is not great for these row crop tractor valuations. But if you're doing revaluations and if you're meeting with your farmers again in loan renewal season before harvest kicks up, make sure you talk about where is their equipment value lying on their balance sheet. Okay. Four-wheel drive tractors, like I said, I didn't have a huge chance to dive deep into these, not as much as I want to. The overall turn rate has dropped about 14%. These have been a little more steady in the market just because OEMs did not ramp up production on these quite like they did with the other ones. Just it's a more complex beast. They weren't able to push it out as much when they had supply chain issues. But now I think the time might be coming due with these turns slowing down and they being higher priced items. So sorry on the four-wheel drives, I'll have to get back to you a little bit more, but Alan gave me a good excuse for that one. And on the self-propelled sprayers here, let me make sure that I am keeping pace with my timing here. Okay. Self-propelled sprayer analysis. Last one they had quite a few good quality sprayers at the AgriVision market. And what we're seeing with sprayers are about a 14% drop in turns. Like combines, sprayers can be more volatile. They are not as stable as what you have with the row crop tractors. And so a 14% drop in your turn rate, they're a huge risk on the dealership lots. And what that translates into is a bigger decrease year over year in the valuation. When farmers had money, it's not quite a luxury good, but it's not as necessary as a tractor. And so those valuations climbed a little bit higher and they were strong all the way into the end of the 2023 season. And with the exception of a few early season sales, we're seeing those drop fairly considerably now to where this is the R4045. So older models still on this one, dropping almost 19% from that green line to that black line. And the magenta is even lower than that. The case 4440, the Patriot, again, you're not falling as far, probably because those values weren't elevated as much in the prior years, but you're still down about 10%. Good thing with these Patriots, you got about as many points above trend line as you do below trend line. And some of that's probably due to some variation in some advantages that they have on the particular sprayer, some bells and whistles. And then a very late model 4010R, not a lot of data points to this one, but you're seeing 24 trend very predictably for the ones that are out there. There are no recent sales that I had for these within the last 30 days. Oh, apparently there was one of them, or at least close to 30 days. But you're seeing a very comparable 10 to 20% drop in these self-propelled sprayers with some downward pressure on those high-value models. And then real quick, just to wrap this up, planters, I didn't go in depth on a whole analysis on those because we could spend a whole webinar on planters. But overall on the planter turns, the interesting thing here is turn rate went up 8% year over year. And on this turn rate, I looked at the prime planter selling season. So we are looking at February, March, and April, those 3 months combined in 23 versus 24, the turns went up 8%. And so what's leaving the dealers' lots went off faster this year than it did the year prior. One of the big reasons for that, and context matters, is that they also are high risk. They're a high value, at least the newer models are. And there's good reason for the dealerships to move those off the lot, for whatever reason possible. They also present a bit of a risk. And so I think there's a lot more incentive for dealerships to move those this past year, which probably influenced that turn rate as well. Because again, this is turn rate in terms of overall units, not necessarily dollars. So I think we're seeing some more of those that have moved at auction and then sold through expanding market share in dealer deals. Okay. And I wanted to end this with 1 to 2 quick slides because I said, and I'm usually a Pollyanna, I admit, but so anyway, times like these, like I said, I sold corn yesterday and it was hurt. It was painful, but there is positives. So first, before I talk about what we might expect in the rest of 2024 and 25, is what do you want to know about? What is helpful information as this market contracts? And it's an open-ended question because I'd like just kind of your free-formed thoughts. But if you wouldn't mind taking a second and just say, hey, I know what I'm getting from you now, but this could be similar to what you put in earlier about what kind of content you might want on, social media, white papers and all that, or what kind of information can we provide through our systems? What kind of assistance can we provide? It doesn't even have to be just information. So feel free to, write me a book there about what would be helpful for you as you and your business go through this market contraction in the ag economy. And while you're writing in that, I'm going to check the chat, see if there's any. Autumn also made a good point that I did forget. And I think it's actually next week. We're going to be at the Deep South Equipment Dealers Association. So if you are going to the Deep South Dealers Association meeting, check out Paul Olson. He'll be down there. And on the auction side of things, our auction success team will be at the National Auctioneer Conference, the whole conference and the show. So she put in a link to where you can find that too. That's why I have Autumn. Okay. So we'll collect that information. That'll help us provide you information. And I wanted to end on, I said it was going to be a positive note, and then I go show this corn market. So obviously commodity markets are super suppressed right now, and that, equipment values do follow the money. They also follow the supply though. So that the commodity prices don't solely dictate the valuations of machines that are out there. Supply does as well. And we didn't overproduce during the pandemic, during the ag uprun like we did back in 2012, 2013. So that's a positive from not an oversupply and a bottoming out of some valuations. The other piece to keep in mind is, and this is a slightly longer play, but like I said earlier, I was on an investment call just before this with experts in the natural gas and the oil fields. And they were actually talking about oil and natural gas being a good long-term investment. Has a lot to do with the non-OPEC nations reducing production. And then that allows OPEC, obviously, to ramp up production and then control prices a little bit more. So if you're buying gasoline for your car, that's a bad thing. But corn is associated with oil prices. And as that goes up, mainly because of the biofuel and the ethanol, but you've got a lot of things in the pipeline in terms of biofuel, both aviation fuel, ethanol, whether it's 10 or 15% blend, and they're likely not going to be 2024 fixes, but 25 and 26, they will have a larger and larger impact on the value of grains. The value of grains have an impact on equipment valuations. The export market right now, China hasn't bought, they bought zilch and beans, which is a pretty big hit to us, which is the reason why the market is down. And they likely won't if they don't need to. It'll be more domestic demand that has to come. But biofuels will likely provide some of that. And so just to what degree and how quickly, don't know. It's probably 25 and 26 things. So as dire as this thing does seem, there is some bright spots and some things that you should follow from a long-term thing. And so if your farmer talks to you and they're all down in the dumps, just tell them that and see if that helps brighten up the mood just a little bit. So anyways, that is what I have for you today. Sorry I had to go through some things a little bit faster, but like I said, probably did about twice the amount of analysis as I was actually able to show you. And as far as the lease residuals, we'll take your guys' input. I know one of the components on lease residuals, as you guys said, was depreciation curve. And I spent a lot more time looking at those curves and those rate of valuation changes as you go on in usage or in age. And those are interesting things I've worked with our dealers and lenders on that you can also find within TractorZoom Pro and just do some quick calculations and reference checks there, even down to the make model side. So if those are things you guys are interested in, let me know, and we can kind of build on those conversations. But see, I'm going to just double check. Don't have any other questions. And from a timing standpoint, we are looking good. So if you have any questions, make sure you can reach out to me. My email is there, acampbell@tractorzoom.com. If you're interested in anything from a TractorZoom Pro, from an Anvil Pro standpoint, make sure you reach out to us. We're helping a ton of dealers and lenders right now in this critical season as things are changing. And we'd love to be able to help you guys out as well. Autumn just put my email in the chat there, so feel free to grab that and spam me as much as you want. I'll look forward to kind of continuing the conversation and working with you guys there. So if there's no other questions, I appreciate your time. Subscribe to our YouTube channel, and you can even subscribe to the podcast Beyond the Hood with TractorZoom. Love to have you join in on those conversations and get your feedback there too. So again, thank you. Have a great rest of your summer. Take care.